All right. Good morning, everybody, and welcome. It's TheoTRADE Chat. It's Don Kaufman here. It's bright and early, May 6th, 2024. It's a Monday. Spoos are up, what? Oh, almost 22 handles. This is actually a relatively important day to see if volatility is still alive, well, and with us. What do you guys think on that front? I'm kind of curious. So, good morning, everybody. Make sure everybody's tuned in, turned on. Yeah, and possibly S&Ps to the upside. One of the things that is a standout right off the bat here this morning is let's take a look that the S&Ps are up more than tech. So I say that's a standout simply because what has led us recently has been, well, tech. The bid back to the upside, specifically last week, was tech. The other aspect worth mentioning here is some sell side activity inside of the bond market, which might just make you change the way you feel about this marketplace. Well, we're going to see. It's exactly what I'm saying. I think today is relatively important to relinquish whether volatility has really been crushed back or whether we're just in a bounce and going to see a fade, which we're going to talk about bounce and fade extensively this morning. Anyway, with that, taking a quick glance, volume inside of the bond market, decent volume inside of the S&Ps, extraordinarily light. That is one thing also that kind of it's a little unusual, but I woke up like I don't know 90 minutes ago or something like that, and the S&Ps they'd only done like 96,000 contracts. There's just not much going on. I mean, volume is starting to pick up here, obviously, right before the cash open. There's not a lot going on right now. It's going on inside of the bond market, but not so much the S&Ps. As I said, and I'll continue to reiterate this, today is relatively important, not because there's any news announcements, not because there's Fed speak, just to see if volatility is alive and well. Any regard, taking a quick glance down the financials this morning, they have a bid under them, but they have a bid under them because of Berkshire Hathaway, which is their primary constituent. Taking a look at the energy sector, it has a bid, but when you start looking at individual tech stocks, Nvidia's up mildly, Tesla's up mildly, Meta's up mildly, Google unchanged, Amazon unchanged, Apple actually down very minimally, and then of course Microsoft up minimally. It's much more slop-tastic. We're going to come into a cash open. There's no question the ticks are going to be positive. Advanced decline line, decent, not spectacular, but an advanced decline line, very close to upside correlation. Let's come into the open, get a quick feel, and we'll kind of go from there on this Monday morning. So as I was saying about the advanced decline line, much better than it would have been anticipated in the pre-market. You're almost at full degrees of correlation. I figured we'd have about 75 to 78 stocks trading to the upside. Look at this, 84 products trading on one side of the marketplace. That's, again, almost full-blown correlation. By the way, the reason that I thought that advanced decline line might be a little bit off is because look at tech right out of the gate. Okay, you have almost 90 stocks trading to the upside, but three of the biggest and the baddest. Oh, the ticks are actually raging strong too. So my oh my, this is interesting. Okay, I would actually call this right now a rotation right off the bat. In the first 10 seconds of trade, you can see it. We are not buying tech. So tech is not being bought. And well, apparently the financials are, and that is why you're seeing a good sized bid back under the S&Ps, but the Nasdaq on a percentage basis is just not there. Also notable, the energy sector is almost in lockstep with the financials. So an early trade, you can see maybe get out of tech and into everything else. We'll see how long that lasts. Again, big day to see if volatility is alive and well. Nasdaq right out of the gate getting all kinds of squirrely. So the assumption from last week, and again, if you're reading the articles and so forth, the assumption last week is that volatility just got squashed. It's over. We're just going to move forward. But well, I'm going to show you a couple things that may change the way you feel about this marketplace. Outside, of course, of just VIX, which did in fact get crushed back. So as we open up and let things kind of settle in a little bit, one of the first things that I'll look at is there's not, I'm looking at volume because there's not a lot of driving factors this week. The expected move for the week is also greatly diminished versus any of the real previous weeks. So, they always say like volatility expansion eventually leads to contraction, contraction leads to expansion, yada, yada, yada. Yada, yada, right over the best part. The best part is I don't really buy into that crap. I mean, high volatility, okay, usually doesn't settle down, okay, in 2 trading sessions. And that will be the theme of, at least my theme for the remainder of this week, is that volatility just doesn't settle down in 2 trading sessions on a bid back under the marketplace. Speaking of a bid back under the marketplace, as I was showing you this morning, Apple was down. It's got a huge bid back under it in early trade. So nice big bid to Apple. We'll see if it continues, because if it does, it will help carry the Nasdaq, at least to some extent. Right now, the bid under Apple is just offsetting the hit that both Google and Amazon are effectively taking. Speaking of Google and Amazon basically at highs. And this one you have to pull up like a little bit of a longer chart, because this is actually well-charted territory from 2021. In fact, I didn't bring up a 5-year on this. Okay, this is fairly well-charted territory right in this 186. We did pop, okay, to all-time highs last week inside of Amazon. Google is also right there with it. Google in recent trading sessions off of recent highs. That was obviously an earnings announcement, kind of faded. This one, it's been struggling lately, but it's been enough to kind of pull markets back to some extent. Nvidia in early trade, once again, big bid under Nvidia, up 1.2%. But, timeout, that's your NASDAQ right there. That is your NASDAQ right now. You can point to Tesla up 2%. Oh, come on, the market cap of Tesla is not really going to do much of anything. But Nvidia has a good solid bid under it. When I say that's your NASDAQ, I mean literally, okay, there's nothing else that is making any degree, and even Apple just gave up, but there's nothing making any strategic or sizable moves other than Nvidia. Meta has actually come in just the last couple of seconds with a raging bid back. It's carrying NASDAQ right now. Again, conversation piece over here is, okay, is this going to be sustainable for today? Nvidia has been bid back for the remainder of last week. I say the remainder, following the Fed announcement, it actually changed direction in Nvidia. Nvidia finished last week very, very mildly higher. So a little perspective around Nvidia after a couple of very rough trading weeks. Just to point out a few rough trading weeks in Nvidia. Here's one, here's another. This one actually finished flat. It's a big down week, big down week. 2 weeks ago, got a bid back under it. Last week, basically flat. Again, fairly critical week for Nvidia, as we are going to be talking about in a few minutes what we kind of term bounce and fade. Okay, the fade in here was quite substantial. We've bounced. Okay, are we actually going to go right back into a fade from here? This and this alone would actually set a considerable amount of the tone for Nasdaq and the entire marketplace. So yeah, no, it's absolutely important. it's the fact of the matter is, you know, the S&P 500, okay, is driven at this point by, a handful of stocks. Those handful of stocks, okay, the fun thing is they were not, okay, some of the primary drivers though recently. The bid back in the marketplace absolutely came by way of QQQ. If you take a quick glance at the Qs, okay, there's a big bid back under the Qs. And again, I'm using expected move just to denote, look, the Nasdaq, okay, far outpaced the S&Ps last week. Okay, if you take a quick glance over at Spiders, Spiders finished the week, but mildly higher. Obviously, the Qs exploded to the upside. Speaking of exploding to the upside, the rally that you're seeing right now, quick glance, okay, it's not financials. Okay, it's definitely not energy. Take a look. It's Nvidia. That's what we said like 3 minutes ago. This has become your marketplace today. That's exactly the point I'm trying to make too, is we're riding high again on, one or two stocks, which, okay, can make this market, that much more squirrely. Oh, this is even more interesting. If you take a look at Nvidia, there's like no option volume really driving it. So you got me on this one. This has to be outright stock buying. This is not, okay, this is not option volume driving it. There's nobody buying calls at the ask or above, hitting bids and taking offers. That's just not going on in here. Look, the number of calls trading is almost equivalent. The number of calls trading on the bid is basically the same as the number of traded on the ask. So we can't point the finger and say that this is huge amount of call buying, which then I guess calls into question how long, with a 15-point move to the upside, how long is that actually going to last? This is again unusual to say the least. Haven't seen this in recent trade. Okay, this is actual buying of shares, okay, not option order flow that's coming out. By the way, speaking of option order flow, quick glance to the SPX. The SPX expected move for today has actually been hit. So in just the last couple of seconds, I mean, look at this, you're 9 minutes into a trading session, okay? A lot has already basically happened. First of all, the SPX expected move, okay, for the day equals, what was it, 2649. Had it 2649. Okay, that's the expected move for the day. All right, we're already home. That's hit, done. The expected move for the week, okay, was 6245, which we'll look at in a few minutes. But at 6245, you realize, I mean, basically half the move for the entire week has already transpired in the, in the first 9 minutes of trade. Okay. It's kind of wild. I'm going to look for some possibility of reversal ideas inside of trade today. Give me just a second. So early to try to step into this. Yeah, so early. Look, there's nothing behind Nvidia, okay, but some heavy shares that are trading in here. Be extraordinarily suspect of the price action that you're seeing in Nvidia. What I will not just imply, but I'll tell you straight out, this is going to come to an end. The stock is going to stall and pull back. I'm not saying that it can't go higher today. Okay. I am not saying that Nvidia can't go higher, saying it's going to stall out. It's going to pull back. If it has any chance of going higher, it's going to have to be call buyers that are going to come in here and rush this marketplace. And that is something, again, we are not seeing the option order flow. In Nvidia, it's dead. It's totally dead. And the stock is still up though, 1.5%. I keep pointing this out because that is trade unlike what we've seen lately. Okay. There's, real buy side activity, basically transpiring inside of Nvidia. It's not just fluff in there. Okay. The other one worth noting and watching, Apple is seeing some slippage back. Okay. Clearly, Apple was in the crosshairs on Friday with a huge bid under it, a little bit of slippage in early trade. And of course, Microsoft Hanging out. I mean, look, a 0.4% move is pretty nominal, right? The market basically paused right at that expected move. There is no options trading in here today. Not in, look at this. Microsoft's totally dead. Nvidia, I mean, this is about as light as I've seen it. Tesla, I mean, Tesla's rocking right now. Okay, there you go. See Tesla, that's got some order flow. There's call buyers in Tesla. Okay, it's still though. This is even light for Tesla. Okay, of course, Meta has a bid under it. There's no option volume whatsoever in Meta either. Yeah, interesting. Okay, very interesting trade early on. There's just not a lot of activity on the options side of things, which calls into question, a lot of the price action that you're seeing on the screen. Things can get squirrely in a hurry. So let me back away from some intraday trade, just kind of set up the week a little bit. A few things that are market drivers this morning. So one of the big drivers this morning in the financials, there's a bid under the XLF. But if you take a look at most of your banks, okay, there's somewhat of a bid under the banks, but the big one that's not really mentioned would be Berkshire B, which this is only up 0.2% now. This was actually up quite substantially in the pre-market. It's pulling back. And it's, by the way, this is going to be worth noting. Okay. Berkshire had earnings over the weekend. It's such a weird thing. Okay. I hate having to describe that. How could somebody have earnings on a Saturday afternoon? Okay. I don't know. It's Buffett. He does whatever the hell he wants to do. Right. It's earnings and ice cream, I guess. Anyway, so a few things happened from Berkshire that are notable. Number one, okay, Berkshire had its earnings, yada, yada, yada. Okay. Number two, though, they had stated that they had sold some Apple, but then at the same time turned around and spoke volumes about how wonderful Apple happens to, in fact, be. So I expected at least based on some of that news, that Apple would have been a little bit more wild, maybe a little bit more volatile this morning. It's really not. It's down about 0.5%. So again, it was like literally in one sentence, Apple's a wonderful company. In the next sentence, right up to the point we sold some of it. And that was comments from none other than Berkshire Hathaway, Warren Buffett. Berkshire, which had a significant bid under it this morning, as I showed you a moment ago, faded. Okay, that doesn't seem to be negatively influencing the financials, but the financials on a percentage basis this morning, okay, are kind of the leaders in the clubhouse, right along with energy. So when we have seen, okay, lower volatility situations, when we've seen lower volatility situations in past weeks, okay, we've actually seen ultimately it's financials and energy versus tech. And we've seen rotations back and forth. We are starting to see some of that today, unto which, okay, we're seeing strong financials, okay, strong energy. Tech, okay, isn't really making a strategic move other than maybe like one product, which again, by the way, here comes a bid back under it. That pullback was so freaking short in there. We're already through the expected move at the trading session. So the question is, okay, the advanced decline line, as the market has rallied, the advanced decline lines actually come down. That's always interesting. The ticks have also softened to a larger extent. Tick is now positive 700. Like, look, it's bullish, it's bullish, it's bullish right now. The only question for me, and actually the contract size ain't bad inside of the S&Ps. The only question for me this today, forget about the whole week, today, okay, is the marketplace stabilizing? Okay. Is the marketplace stabilizing in here? Anybody? Anybody? By the way, Captain Vicky was talking about Buffett said he sold Apple for tax reasons. Yes, but nevertheless, he still sold it. The tax implications, okay, basically, you look at this and you go, well, the tax implications, clearly he was stating he's not going to make enough in Apple, okay, versus what those tax implications happen to be. Either way you wanted to put it, it wasn't a good thing when it shows up on those 10Ks and 8Ks where Buffett is effectively selling, shares of anything at that point. And it's actually one of the reasons I expected Apple to be so much more volatile than it really is this morning. I mean, a little lackluster here. Okay. So as I'm looking at a bid back onto the marketplace, okay, the question is, have we completely stabilized and is volatility sucked out? It's actually what I call like the volatility vacuum. Okay, don't, when you see vol like we have over the last couple of weeks, okay, I am always, okay, looking for a continuation of just that. The volatility, okay, that we've seen sucked out, what I call kind of the volatility vacuum, has only been really, okay, in maybe 1 or 2 trading sessions at most. And it's why, right, I get very, very suspect when immediately everybody sounds the all clear. And that's kind of what I felt coming out of Friday's session, is that immediately trade and traders, and I'm not talking about retail, I'm talking about professional too. Like, that's it, all clear. VIX actually crushed. It's over, people. You can come out. Okay. We had a sell-off, a precipitous sell-off on Tuesday, okay, and on Wednesday of last week. Okay. We rebound to some degree on Thursday. Okay. Friday, no question. There's a big bid under the marketplace. Today, there's a continuation. Okay. At this point, my assumption, and in fact, I'm going to take you over to the spiders, okay, and explain you, okay. My assumption at this point is that we are still, okay, in volatility. All right. We bounce, okay, and there's a high probability of a fade. And my assumption is based on what? At this point, it has to be based on the fact that it's just more experience, okay, and worth taking some shots for that marketplace to roll over, that marketplace to reverse, of which I did put on 1 trade on Friday with the intention of shopping for more today, tomorrow. In fact, I think I'm actually going to be able to shop catapults as long as this marketplace stays up. I may shop some catapults later today, and definitely another in-out spread later today. However, at the same time I'm saying that, I'm not sure that we hold it together that long. I mean, okay, I don't want to feel like rushed to put on a trade, okay? But at the same time, I'm a little apprehensive here if the bid is going to stay under this marketplace, okay? And it's one of the things that, immediately trade starts to look at this and they go, that's it, rally's going to grip back hold. We're going for all-time highs. And I mean, that's fine. Look, traders are going to say all kinds of things, but the kind of volatility that we saw, okay, in my opinion, doesn't debate. And one of the reasons that I would be very much on your game, and again, the bond market also has a bid under it. And the bond market's fairly critical. I would put this as, 1, 2, maybe 3 sessions. Today isn't even a bid, it's totally flat. I'd put this as 3 trading sessions that we have a bid under the bond market. The slightest hint of reversion back down could spark more sell side expressly inside of the S&Ps. So a few ideas on this particular front. Okay, 1, we could actually come in and attempt to buy a put spread for like in out. We could attempt to buy a put spread looking for the bonds to roll back over. Okay, that there's viability to that, but the bond market has had a very funky skew lately. And I'm not sure that the bond market's going to allow for just that. Bear with me here. So it's hot already in here. Like not even 7 o'clock in the morning, and it's already, well, it's not that hot outside, but it's hot in here. Damn computer. It's heating me up. Oh, yeah, it's like 78 degrees already in here. Okay. Turning down, turning on air. Okay. It's going to be summer soon. Okay. It's basically summer. It is. It's May, it's summer. I got to get out of here. I got to get out of here. Anyway, the bid back onto the bond market could be a decent opportunity. Question is the skew going to be permissible? Okay. Are you feeling permissible? So right now we're trading roughly at 89.80. Now I'm going to price a couple of different trades because I know this is going to price like crap. Okay. Because I can already see it pricing like crap. Oh, apologize here. Okay. We're going to go to the 91.89. So this one's trading for 98 cents. Okay. That's actually not bad in terms of pricing. Well, why? It's a $2 wide spread trading for 98 cents. But, okay, I like that. 60 degrees in my office. Yeah, no, not here. Okay, not here, man. So you have the 90s, okay? Sorry, 91s. Apologize. This is a 91.89 spread trading for 98 cents. And I can fill it basically at 98.99. The 91s, okay, 91 puts are in the money by how much? Okay, the answer is about $1.18. So, and by the way, for those of you, if you get like, all freaked out about in the money, out of the money, you can take a look at what's called intrinsic value. Intrinsic value shows you $1.18 of intrinsic value. That's real value, right? I don't usually look at that. I just know that they're in the money. So you're buying a spread for 98 cents that is intrinsically really worth, intrinsic means real, right? So it's really worth basically about $1. But based on where we're trading right now, I might go to the 90 half, okay, 88 half. I would prefer to pick one of these spreads off. Okay, now this one is in the money by 70 cents but cost 88 cents. So there's some extrinsic value. But at the same time, I would just feel better, okay, about executing here. And yeah, I'm 32 days out. What's 32 days based on? Okay, it's more than a feeling. No, I mean, 32 days is based on just my own comfortability, okay, with whether the bonds are going to roll over. Look, I want to be clear about something, okay? We could rip and we could burn right back to the upside, but we've seen some economic data, okay, coming out. And this week, though, there's a lot of Fed speak. I'll route this and see if it goes. There's a lot of Fed speak this week. And that Fed speak this week has the ability and the propensity to be able, okay, to move this marketplace. That should fill. Oh, come on. There we go. This freaking platform, though, is slow. Slow, I tell you. Come in at 87 and see if that can't fill too. So I'm going to, obviously I'm executing into this at 88 cents. Copy this and paste it in a few of the chat rooms and see how we go. See who gets filled, who doesn't, who's going to laugh, who's going to cry. It's good stuff. It's good stuff. I'm looking for the right room to even post it in. I can't find anything this morning. Don's losing it. And the S&Ps are coming down here. Let me just post this in this room. This is a bearish in out spread in bonds. Okay. You guys are welcome to shop that one yourselves. That is one, again, that if I can get a couple more filled, if I can get a few more filled, I'm going to try to send it out. Now I'll send another one here at 88 cents. So I'm just going to work it though at 88 cents. Working it at 88 cents. See, about 25 have actually filled over there. Interesting. The bonds backed off just a couple of pennies as I executed into that. And there's not much control, obviously, I have over that marketplace. Nevertheless, okay, it is yeah, catapult in the TLT, not likely. Catapult in the TLT because financing the bonds, the correlation to the S&Ps may not actually be there. I mean, yeah, you could probably go out and sell S&P puts and turn around and buy a put spread in the bond market. I think that that would be reasonable. But you have to kind of also contemplate if a serious, I mean, really serious sell-off happened in markets. Like imagine you're looking at the S&Ps and they tank one day and then they tank the next day and then the third day they really come down hard. And almost guarantee that the people are going to rotate back into bonds and that correlation will be broken. I don't like that trade. I don't have to like it. Now, I have done a catapult, a version of it expressly inside of TLT, where it's not really a catapult, where I've sold calls and bought put spreads. That's a different animal. And I've done that recently. But I don't think that I want to sell puts in the S&Ps and then buy put spreads in TLT. I might sell calls in TLT and then buy put spreads with that, finance it in, no uncertain terms. But yeah, they're not filling me right now. It's all right. I'll work it. Work it. I'm going to actually get in there and work another one. Okay. This should fill. This should fill. So I can see there's contract size coming through. Apparently, though, it's just not mine. Okay. Mark was actually asking me, and yeah, are there micro bonds yet? Bonds themselves are relatively small. So like if if you don't want to trade bonds, you trade notes, and the notes are very low volatility. You just trade notes, like, and this is basically, the same as the as micro. Let me actually get this trade out to everybody. So we're going to be buying a June 24, okay, 90 half put, selling a June 24, 88 half put. Again, it's in the June 24 expiration, 88-cent debit. And here comes the text message. Now I've only filled one contract on this. I've only filled one contract, so kind of going out on a limb and actually sending this to everybody, but screw it, because I'm already working 3 more behind it, and I'm pretty confident that this should fill. So I normally fill a few and then send it out, okay? But in this case, as I said, I'm fairly confident that that we're going to achieve a fill in here. Yeah, I filled one in here. I do my in-out spreads here, pretty much everything else now on Tasty. Okay. But I don't seem to be able to fill any more right now. And it's probably because, well, with all due respect, look at this. Okay. You can see our contract size sticks out like a sore thumb, right? So we've done 100 contracts, but now, okay, this is about to go out. I'm looking at my phone. This is about to go out, and there will be 3,000 to 4,000 contracts sitting in the queue. That should make things a little bit more interesting. Like that 100 contracts was us basically probing it, and you can see the contract size start to come up right now. But get your order in. Interesting that some people, like Neil's, like I filled. Okay, why the hell can't I fill? Nah, it's just there's enough size already in here, and I don't mind that at all. By the way, I want to be clear about something. When some of you fill, okay, that's the idea. I don't want to try to front run. There goes the text message coming out. I don't want to try to front run anybody. Like one of the most important things to me is that you can and will get filled. Like that's one of the most important things. But it's not about I got to jump out, get filled, and then get you guys filled afterwards. Okay, I probe in the order, and then I put the order in the chat, so I make sure that my chance of filling is equivalent to your chance of filling. It's also important that I'm rushing out, okay, in traffic along with you. That nobody has any fill advantages and so forth, because I've watched people trade like 100 contracts. I've literally watched somebody trade 100 contracts of a fairly illiquid product. Okay, hear me out. Text it out to their client base. Then the client base comes in, creates an artificial bid, and then the other trader was actually selling some of his 100 lot back to his own clientele to scalp, 10 to 15 cents off of it. Now, 10 cents doesn't sound like a lot, but on 100 contracts, you make a grand here, a grand there. Do that 4 or 5 times a month. It's an extra $4,000 or $5,000 in your pocket. Okay. And that's if you're only trading 100 lots. And it's crazy. That's crazy stuff. I do not like it. I don't have to like it. I don't even want to like it. All right. So TLT is a trade that I'll continue to work. In my opinion, we're only a penny and a half away for a fill. That this net change has to be minus 3 cents, okay, for us to fill a bunch of contract size. And if the TLT just kind of dribbles up just a little bit, you'll see that the volume here will jump quite readily and quite substantially. I can also see, look at this. If you watch this 161, look at that jumping, okay? So you know at this point that that is impossible because all of us are sitting in the book at 88 cents. So what's going on in here, by the way, you'll appreciate this. What's going on in here is that people are filling their spreads, okay, and you can see spread, 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 spread. Look, the exact expiration. By the way, you can come in here, you can isolate all of it. Series, let's actually isolate to what? The June 24. Okay, apologize. I'm just going to show you something very cool in here. Okay, just look at puts, and there we go. So what we basically are isolating to is the ability to see just our clients. And let's actually put in here, okay, just spreads. So conditions of spreads. This is all of our clientele, okay, filling. And as you're actually filling, you can kind of dig in here and kind of tell. By the way, a bunch of people just filled. A bunch just filled. A bunch of onesies and twosies in here. But in any regard, there's that 3 cents. I'm surprised I'm not filled right now. So now Don's getting frustrated. Anyway, that a huge chunk just filled. So you look back over here, now we're up to 227. I'll come in here and cancel replace and work orders, okay, in a variety of different places. Don's getting angry. Anyway, the point that I'm trying to make is very simply, a lot of the order flow right now that's filling, they're doing 89 cents. Okay. By the way, I see a lot of people just filled at 88 cents. I should be filled. It's only, eh, I'm starting to wonder like Schwab. Starting to wonder here, Chucky. Starting to wonder. Okay. Because how are they actually routing orders and so forth? It could be a little bothersome. Well, you can see I've got 3 in here, all at 88 cents. None of them are filling. Anyway, I'll leave it alone at that point. I'm going to go nuts in about 2 seconds over here. Start throwing stuff. I'm warming up to the idea of throwing a mouse. Okay. The mouse didn't do it. I did it. Just curious if everybody else saw the text message come out. Because I see the push notification, but I don't see the text. We'll get more clarification on that in just a moment. Coming back to Nvidia for a second, because there's just a very, very unusual trade activity in here today. Okay. Again, there's some really funky trade activity in here. The option order flow is cool. People did get the text message. Why the hell didn't I get the text message? I got push notification, but I didn't get the text. I don't know why. Okay, cool. All right. If you guys got the text, then you got it. All right. It's not you, it's me. Maybe they took me off the list. They were like, that guy's really starting to piss us off. He's done. I am out of the contest. What I am, okay, what I am deeply bothered by. Bear with me here for just 1 second. Delete that out. All right. Yeah, somebody else said they didn't get the text. Yeah, maybe 50-50. Blocks it out in packets, but that's something I'm going to keep a really good eye on because I never not get it. So, all right, what I'm really bothered by this morning, S&Ps haven't done anything. I mean, since the open, they were up what 22 handles since the bell went off. So they've moved like a whopping 9 handles since the last 40 minutes. What I'm deeply bothered by, and I really am, the Nvidia trade. So Nvidia is ripping by the tune of almost 3%, but it doesn't seem to be the options order flow. The option order flow is equivalent in here. It doesn't appear to be call buying. So it's some type of hedging activity that's just driving the stock a little bit higher, but far be it for me. Like I don't see it. When I look at stuff like Tesla, Tesla had pretty extraordinary amounts of calls being bought on it, which is driving the stock price up. That makes a lot of sense. When I look at stuff like Meta, what are we seeing in Meta? Meta is totally dead. There's no option order flow in here that's unusual to any stretch of the imagination. Like you're back to this, it's literally you have financials clearly that are bid. And financials are actually leading, the pack in the marketplace. You have energy, big bid back under it. No question, oil is up, energy is up. And then it becomes the one stock market where, Nvidia is your entire Nasdaq. You tell me what else is driving Nasdaq. I know you're going to point to it's Tesla, but again, Tesla, first of all, Tesla's coming back down right now, but Tesla doesn't have the market cap. There's a little bit of Meta. I would agree with that. It's all Nvidia. It's all Nvidia. Everything else is flat to down. In fact, you could actually say that Meta is offsetting maybe a little bit of Apple slippage and a little bit of Amazon slippage. Like this is a sketchy little marketplace right now. So I'm going to go to the QQQ. And the reason I'm going to go to the Q is I want to see what volatility looks like. So now this could be a cheap shot, for a reversal in the day. It's so freaking early though. To try to take this shot. Screw it. I'm just going to fire into it and see what happens. Okay. Did I seriously just miss that? I just put a bid in at 17 there it goes. Okay. All right. So I just bought, and I'll post this in chat. I don't care here if you guys want this. Okay. This is purely, it's an intraday trade. And I'm actually going to provide a little bit of background as to why I'm doing it, how I'm doing it. Okay. Everything. Do I see high probability of NASDAQ reversing today? I don't necessarily see that. Okay. I just bought a one lot too. I'm willing to risk $117 on the pure implications that the Nasdaq could reverse on the day. First of all, you have one, two, three major Nasdaq stocks, okay, drivers that are down on the day. That doesn't mean that much to me. And you know, Microsoft is basically flat. What means everything to me is that I see Nvidia's bid. Okay, I got it. Nvidia's bid, and it's coming off a little bit, but I don't see the bid being sustainable because option order flow isn't behind it. Now, that is not to say that option order flow can't just come flying in and save the day in there. Okay, it absolutely could, but I'm also trading on the notion, and I think that this is probably the bigger theme on this one. Okay. I am also trading. I still never got the text message. It doesn't like me. I'm also trading on the notion, okay, that overall volatility in the NASDAQ, okay, is far from over. Oh, look, I just got the text message. Yay. I got it. I got it. I got it. It only took 12 minutes. I must not be on the important list. Okay. Anyway, I am still under the opinion and the notion until I see otherwise that we're in a heavy volatility situation. Now, if you take a look at the QQQ and I come over to analyze, we gonna analyze something. Take a look at today. The expected move in the Qs today is $3.20. We didn't even move to that. So I'm putting myself at consequently quite a bit of risk in early trade. And I don't usually like to do this, but we'll take the shot early trade. Take the shot in early trade. And look, if I'm going to be wrong here, I'm going to be wrong and I'm going to lose $1.17. If I'm going to be right, though, it would be a fairly wicked reversal to where the NASDAQ wouldn't just be down. It'd be down like 100 points, like a 200-point reversal. That would actually put my options in the money by like $4. It's like 1, 2, 3, 4. This option would be worth like, $4. I paid $1.17. It could be worth $4. I think that the risk reward on the trade, okay, is the only leg that I have to stand on. Like, I'm not going to sit here, and I want to be clear, I'm not going to sit here and try to convince anybody, okay, that this is a trade predicated on anything that I know about the marketplace. The only thing that I know, and I like to be very forthright when I put on a trade, because I don't want you to get on, I don't like people putting on trades with like the thought or the notion, okay, that I know something that they don't. Okay. In here, the only thing that I know is that we've seen considerable volatility lately. Okay. And that's important. So, with that being said, okay, the only opinion that I have on this trade is that this risk reward, and it's trading for exactly what I paid for it. This risk reward is totally viable just to hold the position to the remainder of the day. It's worth risking $117, okay, on a one lot for the idea that we could whip back around on the day, the assumption being that the volatility is still there. That's it. Okay, moving on. Everybody good with that one? So I routed the TLT trade and that little bastard's still not filling. Okay. Don's getting angry. So I'm going to cancel replace it again, put it right in the face, 88 cents. Look at this. It went up in price because all of you are doing horrible things. Only 400 have actually filled. Okay. I am frustrated, but whatever. It's going up in price because supply and demand. Now, I'm going to go back to Mark's question. Okay. First of all, Mark, I will not stay focused ever. Mark was asking, okay, stock versus no option rally. Okay. Is it people getting out of cash, okay, and into money-making products as an inflation hedge? So no, I don't believe so. Okay. The idea of an inflation hedge is pretty ridiculous. That is, by the way, for those of you that aren't familiar with this, if inflation is still with us, no one wants to hold cash because inflation, cash doesn't do well. They take capital and chuck it into the marketplace, and it's all like lovely. Anyway, it's all well and good. I'm actually of a little bit of a different opinion. I think that the jobs data that came out on Friday is going to be the first of many warning signs of a dramatically cooler economy as we turn the corner into summer, turn the corner into the election. I mean, if there's a recession that's going to happen, we're going into it right now. Like right here, right now is when the recession is going to happen, if it's going to happen. And people talk about it's a soft landing, it's a hard landing. I don't give a damn about that. People also talk about bullish or bearish markets. I don't give a damn about that either. Okay. That's fine. You want to, I must put a label on it. Okay. I don't know. Is a recession a soft landing? No. Okay. You just got to take GDP down and then just pull up, pull up. Yeah, that's impossible. Okay. This is like, Boeing 737, kind of crap. There's no easy way to cool inflation without pulling out asset prices. And Mark, here is my real opinion on this one. There's no way to cool inflation without crushing asset prices, period. I don't give a crap that the Fed has a dual mandate. Fed says jobs, they're important. And then the Fed also says inflation, also important. Yeah, well, inflation and asset prices, unfortunately, are joined at the hip. And you're not ever going to convince me otherwise until the Fed slays, okay, the asset bubble. Okay. And by the way, I'm not here to argue whether it's a bubble too. I hate that crap. It's a bubble. It's not a bubble. Okay. Look, what you're seeing in AI, okay, you want to have an argument? Here it is. What you're seeing in AI is the same crap that we saw in EV. Okay, it's the same crap we saw in pot stocks a couple of years ago. It's the same crap we saw in crypto. There's crypto, and then there was pot stocks with crypto. And ironically, the people that smoked a lot of pot bought a lot of crypto. They both got screwed on both trades, and okay, they lost brain cells along the way. Huh? You like that one? Then on top of it, after that, then it was the EV craze. Okay, which obviously Tesla, rode high on that one. Tesla though is not the marquee. This is not the poster child for the EV one. The one that really is stuff like Lucid. Okay, yeah, tried for the corner and missed. Or okay, Rivian, who the hell cares? It's done. Okay, I'm not even going to pull it up over there. I just forget Rivian. So, but it's the same crap. Okay. And it's again, my argument isn't that it's a bubble or not a bubble. I don't really care what you think about a bubble or not a bubble. Asset prices, okay, are out of control in here. They have to come down because to me, okay, I like the idea of AI. Yay. I don't like it at $908. I also think that Nvidia, okay, may not be the stock that produces, eventually the best chips out there for this. Okay. How many Nvidia whatever GPU cards you want to buy. Eventually, okay, Microsoft's going to build something better. Apple's going to build something better. By the way, they're all right now building their own systems for specifically, who's one of the biggest and the baddest right now, okay, is Intel. If you believe that Nvidia is a bubble, okay, look no further than Intel. Intel over the last 3 years, okay, let me put it on a year-to-date basis, down 35%. They have in development, okay, better compute than Nvidia. So yeah, I got that going for you. All right. Anyway, I'll be okay. I'm okay to go. So if you Mark started this, but Mark, if you will, yeah, I don't buy like inflation is still here. I think the inflation discussion is over. Inflation's definitely reigniting. That just basically says we got to squash it harder. It's because they haven't squashed asset prices. No one feels, okay, like they're going to, inflation's a problem if asset prices get killed. And the other aspect is that's, that kind of kicked off right here. Things got a little bit crazy, okay? And if you look around, economic data changed overnight with a month of volatility. It literally changed overnight. All right. Now, is the Fed sharp enough to actually turn around and say naughty? But the Fed did one thing that really kind of pisses me off. Okay. And look, I'm not like the anti Jerome Powell, but the Fed they're tapering, okay, off the runoff of their balance sheet. They're tapering. Okay. So they're tapering the balance sheet. The balance sheet, I think, was at like 9 trillion. I think they got it down to like 7.4 trillion. Again, I'm just out off the top of my head. It was a 9 trillion. I think they got it down to like 7.4 trillion. But now they're going to taper, okay, the taper. They're tapering the bond, purchases and so forth. Then they stopped bond purchases. So they're running off the balance sheet and they're going to taper the run off the balance sheet by more than anticipated. And, if people want to know why did the marketplace rally? The marketplace probably rallied last week on the news, okay, of that balance sheet being, lovely and inflated. Okay, it's again, I don't know why necessarily they're doing that. Well, I can give you a couple of reasons. Japan is probably one of them, but I mean, speaking of Japan, it's also worth noting, okay, we're still on yen watch 2024. The yen was able to recover quite substantially. Okay, they stabilized it, but that, people, to me, that's one of the other reasons. Like, if you really want to know why I think there's a lot of volatility still to play this summer, I don't think the yen's going to be something easy to stabilize. I think that there's chum in the water, and that trade kind of continues to be a big issue, big issue in there. But this is predominantly why I believe that the Fed is doing what they're doing. They're trying to soften the dollar a little bit, okay, with that. So by basically not tapering the balance sheet as much, they're keeping the money supply relatively high, okay, and diminishing the dollar just a bit more, by the way, which is inflationary. Okay, at least in my opinion, you keep a lot of capital out there, it's inflationary. S&Ps right now are still at basically highs of the trading session. It's a pretty lackluster session. But again, the question for today is like, is volatility still going to be with us? And you see glimmers of it. And it's why I did the trade inside of the Nasdaq. You see glimmers of it, but we're definitely not home yet. I've only filled on one contract of the TLT trade. I also put on the Goldman Sachs trade the other day. So here's Goldman Sachs up another $5 today. By the way, when you're looking at this, don't worry. Okay, timing is never going to be perfect on these trades. What I basically did is saw breach. Okay, whatever. You got to step in. I can't wait. Like, I'm just going to wait one more day for another rally. Like, the thing is, with an in-out spread, you just got to close your eyes and kind of step in. Otherwise, you're never going to get the trade on. So we put the trade on. It's got 32 days left. Okay, you can see some more contract sizes filling today. So we're going to be up to about 2,000 contracts in there. Just be careful on the Goldman Sachs trade. Why should you be careful? Because the Goldman Sachs trade is a $5 wide spread. Five! You do less contracts. Five! What was the wrestler, the gigantic wrestler, when they count 1, 2, 3, but he was like, no, five. Okay, been hanging out with Corey too much. Corey in the Worldwide Wrestling Federation. That was a long time ago. Somebody's going to remember that one. Anyway, so the Goldman Sachs trade is down nominally, but again, to keep your allocations under control, if you normally trade like $500 per trade, you're only doing like a 2-lot inside of Goldman Sachs. In TLT, I'm a little frustrated because Captain 1-lot over here, I'm still working a bunch of trades, and I'm going to create a duplicate order, okay, and work yet another one at 88 cents. Still trying to fill it at 88 cents. Okay, we'll see. A couple of contracts have filled. There's like 600 filled right now. This should be closer to about 3,000. So obviously there's a lot sitting in the book. Okay, it was not Andre the Giant. I don't think it was Andre the Giant. I could be wrong though. Okay, it was a very pleasantly plump individual. Okay, King Kong Bundy. That is it, Les. That is it. It was King Kong Bundy. King Kong Bundy. He got it. Okay. By the way, I didn't know that one. I knew I would know it if you said it. King Kong Bundy. All right, it's good stuff. All right, dude, don't you people ruin my childhood any more than other crap that has gone on lately. Oh my gosh. Okay, it's all ruined for me. It's all ruined. S&Ps, when I was talking about a moment ago, are literally at highs. I do have to bring on, okay, I do have to bring on the professor. Jeff Bierman's going to be coming on here momentarily. I don't know what he's talking about. I'll figure that out in about a second over here. I got to give him a link. Okay. I don't want him to come on, but it's going to happen for him. Anyway, he's talking about addition by subtraction. Hey, Jeff, I think you used that pun about 6 times too many. Addition by subtraction, the power, okay, of the detrended price oscillator. He come up with this crap. So Jeff has to have some type of a pun in every single title. I'm not exactly sure how addition by subtraction is actually a pun, okay, but more a metaphor for your life. Let me continue on over here, okay, as he's like logging on. I'm not going to let you in. I'm not going to let you in until I'm fully done, Jeff, because I know I'm going to take some crap on that one. It's good stuff. Good stuff. Okay. Oh yeah, Big John Stud was huge too. But no, it was definitely King Kong Bundy. I remember now. I only remember I have a brother that's like 6 years older than me. Okay. Took a lot of beatings in my day. Okay. Took a lot of beatings in my day. And yeah, but now he's 6 years older than me, and that's like, going downhill faster. So I have a shot. Okay. It doesn't matter that I'm in my late 40s and still get the crap beaten out of me by my brother. He doesn't have a shot anymore. He won't even do it. Okay. 54 years old, crap's falling apart. Okay. Not going to happen for him. Not going to happen. But yeah, used to, King Kong Bundy me. Yeah, it's not good. Anyway, the Nasdaq, I have an intraday trade on in here, just to update you. It's even less than I paid for it. I paid $1.17. By the way, it's all or nothing in here. Either we're going to reverse, it's going to be spectacular. Now, do I see a reversal in the cards for the marketplace? I don't see much going on at all. I mean, it's kind of quiet, but I like the idea that Nvidia is just trading on thin air right now. So I like that idea. It works well with me. In any regard, I'm going to turn it over to the professor. Jeff Bierman's going to come on here momentarily. S&Ps right now are basically sitting at highs of the session. Yeah, as I said today, in the volatility vacuum, okay, of the VIX, ironically, the VIX actually headed back up a little bit. I don't think that means much of anything. Okay, vol got crushed. I'm just not a believer that vol can get sucked out of a market in 2 trading sessions. Today, important to see if volatility is still alive and well. Stay tuned. Jeff Bierman is coming on right now with a actually really good session. I like it. The power of the detrended price oscillator. Stay tuned. Jeff's coming on right now.